It's an hour before the open on Tuesday, October 19th. I'm going to try my best to get this video posted before the open so that you can get a nice pick for today. And let's take a look at yesterday's pick. That's how I like to start all these videos off. I like to show you that the picks that I'm making are actually working out. In fact, let's start out with Sunday night's pick. You had every opportunity to get long Home Depot on the open Monday because I posted this video Sunday night. There's your opening right there. Hello. Really nice move higher. I love that D1 price pattern, that breakout right here, gap higher. That told me that this stock was ready to rumble. We got a little bit of a pullback in the market. Yesterday, we had a gap down. I'm going to talk about that. It's very significant. This is going to be a critically important lesson for you. So please stay tuned. I'm going to take a look at Amazon and then we'll talk about the market. So Amazon yesterday, I love this breakout above the 100-day moving average. You can see how this long green candle, hardly any of it retraced. Ideally, we'd like to see at least the halfway point preserved. Never even got close. Then yesterday, it took off through the 100-day moving average. Once it got through that major moving average, it had all the fuel it needed to move higher. Here's a look at the 5-minute chart. This is about where the video came out yesterday. About halfway through the trading session, you can see that the stock rallied from 34.12 to about 34.48. So about a 40-point move in the stock, and it's looking higher this morning. I love it. I think Amazon's going to continue to push higher. So let's take a look at the market because this is a critically important lesson. Yesterday, you probably made a lot of money. You did really, really well. And you look back and you think, hey, this isn't so hard. All I have to do is what I did today. And if I can do that every day, I'll be able to make a whole bunch of money. So you come in today all bright-eyed and bushy-tailed, and you're all happy about the money that you made yesterday. This is great. I can't wait for trading to start today. And so the market opens, and you start trying to implement the same things that you did yesterday. And by the end of the day, you've probably lost some money, given some profits back because you have not taken the market into consideration. Market first, market first, market first. I can't emphasize that enough. That's why you see it in every single video that I do. So what happened yesterday that made the market so different? And why is today going to be completely different than yesterday? Well, we had a gap down open. And you know from my pre-open market comments, I was looking for consecutive long green candles stacked with very little overlap. That would tell me that this was a dip that you want to buy. There you get your follow through right there. More green candles stacked. These candles right on the open filled the gap. All of this told you, hey, smooth sailing. This market is going to go higher. It wasn't just the price action on the open. The table was already set for us last week because we had the S&P 500 bouncing off of major technical support, bullish hammer. Then we come in last week on Thursday, we get this big gap up and it closed above the 50-day moving average. That was a big deal. So we clear this downward sloping trend line and we close at the 50-day moving average. So the price action on Friday was also very bullish. Now it confirms that yes, this breakout through the downward sloping trend line was for real. This 50-day moving average held, and yesterday the gap down, we knew that we should find support at that 50-day moving average. Never got down to it. And the market rallied off of that 50-day moving average. So we had a very, very bullish backdrop because we had broken through that downward sloping trend line on the S&P 500 and we had gotten above the 50-day moving average and it had rallied before it even touched the 50-day moving average, and we got these long green candles stacked on the open that told us that we were going to have a bullish trend day. Why is this all so dang important? What is the point here, Pete? The point is that we had a 3.5-hour rally into the day, very sustained, a small reprieve during the middle of the day, and look, we get a bonus rally at the close of the day. You are not going to get many days like this because it was the ultimate setup. It was the perfect setup. It doesn't get any better than this. That market pullback validates the 50-day moving average. You get long green candles off of that low, and you get sustained price movement through the course of the day. This is your tailwind. The market is your tailwind. If you were trading individual stocks and you thought, gosh, they performed so beautifully, this isn't really as hard as I thought it was. It's because you have this stiff market tailwind that is propelling that stock and is keeping those pullbacks in the underlying stock to a minimum because there's no market selling pressure. So when you come in today and you're all bright-eyed and bushy-tailed and you're like, yippee, here we go, let's do it again. And I just have to do the same thing I did yesterday over and over and over again. You're failing to look at the broader picture. Today we have the S&P 500 gapping about 20 points before the open. So we don't have this running start from way down here. No, in fact, it's the opposite. We're going to gap higher, and then we'll probably move a little bit higher for maybe a half an hour, maybe an hour, and then we're going to flatline. Let's take a look. Let's see what the price action was like Friday. Big gap up. Okay, we have a little move. Then what do we do the rest of the day? Compress. If you're trading stocks, they are not going to be marching higher in an orderly fashion. They're going to go up, pull back, go up a little bit, pull back, go up a little. All of a sudden, now you've got random price movement. What happened? What changed? If you're oblivious to the market, you're not going to even know why your trading is not as profitable as it was yesterday on Monday. You don't have the same market backdrop. So you come into the day, you get maybe a little bit of a rally, and then you flatline. Now, here's something else that can happen. If you come in today and you're looking to buy the open on this strength and you're thinking, yay, this market's going to just push higher, you have a chance. Know that every bullish speculator is going to be buying the open as well. Know that you have a chance for a gap reversal. And you start coming in and you start filling in some of that gap. Well, if you bought right on the open, you are going to be sweating bullets because you're going to be ready to stop out of that position. Heaven forbid you get a gap reversal that lasts the entire day, then you'll have your head handed to you. So you need to come in much more cautiously. If you were going to take a running start at a door to try and open it and you put your shoulder to it, you're going to want to start from back here. You're going to want to start from 10 feet back. You're not going to want to start from 2 feet back. And that's what the market's going to be trying to do is it's going to be trying to advance, but a lot of the gas is already going to be consumed on that opening move higher. So market first, market first, market first. What the heck is the market doing and how does the opening move fit into the context of the longer term picture? How does it change my trading for the day? That's the picture that you have to paint for yourself every day because it changes every single day. Every day is different. That means your position size needs to be different. It means you treat your stops differently. It means that you set your profit targets differently. Yesterday, you could expect, hey, the market is going to run higher. It's got this head start. I've got these long green candles, and I can take a position and I can actually let it run for a while. I don't really have to worry about it because all of these candles are pointing higher, higher lows, very nice, orderly, consistent price action. Well, you're not going to get the same thing today because there are people who are going to be selling and looking to take profits after the market's made really nice gains over the last 3 or 4 days. So the price action is going to be much choppier. You're going to need to be more patient on the open. You're going to really need to pick your spots. So that's the point that I'm trying to drive home. Let's take a look. Let's see what we can find as far as stocks that I like. I'm going to go into my buy into earnings search. I'd mentioned to you that all of these companies will report in the next 2 weeks. We're inside of that 2 week window. I've gone back and I've taken a look at how all stocks have performed once they get inside that 2 week window before they report earnings. And I'm looking for stocks that have rallied into the number more than 75% of the time over the course of the last 3 years. So we have all of those ingredients in this buy into earnings list. All of these stocks have a tendency to run into their earnings announcement. All of them will be reporting in the next 2 weeks. Click, 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 click. All you have to do is go through and look at each one of the charts. I tend to prefer looking for stocks that have not made monster moves, that have kind of coiled before the earnings announcement. That tells me that there's a chance for them to have a nice little release into that earnings number. And I also love selling out of the money bullish put spreads on these stocks because I don't necessarily need to have the stock go higher. It can stay right where it is into that earnings announcement. And I know that it has a tendency to do that. So if I sell a bullish put spread, could be at the money or just a little bit out of the money to give myself even more cushion. That to me is a high probability trade, especially when I have a very bullish market backdrop, which I happen to have right now. Go one more look at the market, take a look at that daily chart, downward sloping trend line breach to the upside, long green candles, nice bullish engulfing candle right there above the 50-day moving average, positive open this morning. Everything looks pretty dang good. Do not chase stocks on the open when we have a gap higher. So we're going to open somewhere up in here today, getting pretty close to the high. So you need to be more careful because we've seen steady selling pressure. Somewhere in here, people will be profit taking. So let's take a look at the list here. I've already gone to Microsoft. I want to keep this as brief as I can because I want to get this video out to you so that you can watch Microsoft today. There we've got a high right there. Put the crosshair tool up. You can see the resistance level. We had the breakout yesterday. This stock is not too far out of the gate, meaning it has not run like mad. You can see how it found support above the 100-day moving average. Even the QQQ violated that 100-day moving average, but not Microsoft. It's a sign of strength relative to the tech sector, and the tech sector has been performing very well the last few days. And you can see that strength right there, how it's really moving up quickly, also through the downward sloping trend line, through all the major moving averages. Microsoft is your pick today. So let the stock open up. You've got a nice upward sloping trend line here that you can lean on. I'm going to click GTC. I'm going to drop that alert line. This to me would be my stop out level, and it comes into play right around the $300 price point. So look to sell out of the money premium put spreads. You can go a little bit closer to the money if you're day trading and you want to be more aggressive with it. You can also wait for a dip in the stock today and wait for the market to set up. If the market bid is confirmed, Microsoft has good relative strength. Well, how will I know that? How will I know any of that? Well, you can use the 1OSI indicator in Option Stalker. We're going to put it up. Orange line above 0 tells you that you have relative strength. This is when you want to be in the stock. This is when you want to be out of the stock. Let me highlight that. Relative strength versus the S&P 500. You want to be in here. Relative strength starts to wane. You want to be out here. Very nice gain. So today, what you'll want to see is on the open, there are a few different patterns that can take place, and I'll go over them. We can have long green candles stacked like this, but a gap higher, and then long green candles. Very unlikely after the move we've seen. If you get it, fine, you can aggressively buy stocks and you can expect the market to probably hit a high in about 60 minutes, maybe 90 minutes, and then flatline the rest of the day. Another pattern that we should be watching for is a simple compression. Compress, 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 compress. The longer that compression lasts, the more likely we are to move higher because it shows that buyers are still willing to support that opening gap higher. They're not giving up any ground and sellers are not that aggressive. So as time passes, eventually they know that sellers are not able to knock the market down, and it will start to grind higher. This time and that compression gives you the ability to evaluate relative strength. And you can look for stocks that while the market is flatlining are tick, 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 ticking higher, and that have heavy volume, and that have broken through technical resistance. Those are all bullish factors, and that stock wants to go. The final pattern that we could see is we could see, and I'm not looking for long red candles stacked, long red candles stacked, long red candles stacked. If you see those consecutively in the first hour, half hour of trading with little overlap, that is a hard gap reversal and a big sell. I'm not looking for that. Overseas markets were very strong. There's no reason to expect a gap reversal right now. We are in risk on mode. So, not expecting that, but what we may see is a nice little pop up, get all the bullish speculators just like gobble, gobble, gobble. This is great. We're going higher. And then all of a sudden you start getting some red candles and you start filling in some of that gap. I don't know that I'll be able to scroll back quickly enough to find one of those moves, but we've had a number of them recently. The point is that you need to evaluate the price action on the open. You need to see if the market's still got a lot of strength in it. If you start seeing an open with lots of mixed green and red candles, there's a gap open. So everybody gets excited. You get in here, you buy. Oh, there we go. Green candle. Oh, this looks fantastic. And then you start pulling in and filling in some of that gap. So this is a little bit more severe. You see long red candles like that stacked. You know you've got more downside. And after heavy selling like that, you also know that this is not going to be one and done V bottom. This is going to be a bottoming process. Higher, low, double bottom. Now we go. And I'll see if I can find one more example where maybe not as a dramatic a fill-in of that gap. And I don't know that I'll find it. Be careful on the open. Don't expect that today you're going to make money just as easily as you made money yesterday, because it's not going to happen. You've got a completely different setup and you need to be aware of it. There's a gap up. You run up for about 60 minutes or so, and then the air gets taken out of the sale and you go sideways. So when you're trading stocks and you've got no help from the market, that means that the price action in the stock is also going to be choppier. I hope this lesson helps you make money today. Please leave your comments. Please give it a thumbs up. Please let other traders know about this channel. If it's helping your trading, it'll help their trading too. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.